And joining us now is Craig McDaniel. He's the president of the McDaniel Corporation, and still with us, our guest host, Allison Deans. Craig, I want to go to you on the markets and that month-to-date performance that we've seen. Obviously, the S&P 500 hanging out over 1,300, and that is an important point. We also had the Golden Cross, which usually signals double-digit gains for the markets. What's your take on the markets so far and the performance that we've seen?
Well, Jackie, locally, I do see some good things happening. I see confidence up. I'm on the front line, and I meet with my clients, every day, and I see their confidence increasing. But I'm just not jumping on that bandwagon yet. You know, I still think that our economy is very fragile. I think that we're definitely not out of the woods yet. As you mentioned earlier, for example, Amazon reported a loss last quarter. The holiday sales are not as strong as we hoped. And the debt out there, the public debt, the private debt, it's just, I think it's acting as a bit of an anchor on our economy. And so, although we're doing real well now, and I hope we do well longer, I'm not as optimistic for this year. I'm still a little bit bearish on the market for the year.
Okay, and you bring up a lot of great points there, but I do want to stick with tech for a moment. Of course, we did see those Amazon earnings, and I just mentioned month to date, we saw the NASDAQ up over 8%. Are we seeing a little bit of a bubble in tech here, and is this something we need to be worried about?
Actually, I don't think there's a bubble yet, and I think that one of the strengths of our economy really is our technology, and also our American developed technology. So I don't see a bubble there yet.
Would you even consider Amazon tech? I look at Amazon these days and viewed as a retailer and a function of consumer spending. What do you think will happen in the consumer sector of the market?
Well, rather than pick individual stocks, I tend to pick the stock pickers. Now, we like Amazon, and in fact, here in South Carolina, Amazon has recently opened a large distribution and call center. And so we definitely think there's growth there. We do see more. We think that we do see more people moving toward using the online retailers.
And Craig, I want to get your take on gold here. We've seen some staggering moves in gold as of late, but you are a bear on the precious metal. Tell me why.
Well, you know, gold is one of those things that we don't have a huge opinion on. You know, it's one of those things that we're not in love with, but we don't hate it. But we just don't get too excited about it at this level because even though it's gone down from its highs, it's still very high historically. And we think that since we don't feel great about the economy for the year, we feel like as one of the other commodities, that it's probably going to go down more. There's a chance it'll go down more this year versus going up.
Craig, where are you telling your clients to put their money if you're worried about the market, a bit concerned about gold and gold's valuation?
Well, you know, that's a good question. And right now, we actually are a little bit contrarians. We do like the idea of treasuries. We think that there's a lot of confidence there. We actually like some of the fixed incomes right now, not with the longer durations, and we also like the municipal bonds. We also like dividends, dividend-paying stocks. We're just being cautious about our picks and trying to do some good research on the stock pickers and on the municipal bonds.
Craig, it's Ross here in London. I find the Treasury call interesting. A lot of people got burnt last year forecasting the end of the Treasury bull market. Why? We had another one yesterday. Bill Sporopoulos came on and said, I'm a big bear for Treasuries. Why might they be wrong again?
Well, you know, I simply think that the government's going to do everything they can to hold down interest rates. And I think I'm really less worried about inflation. I think because it all draws back to the big picture of how we feel about the economy. And we think that interest rates are not going to go up, and even as low as they are, they still may go down a little bit more. And we think that the government's going to do everything possible to keep them low. And, you know, there's some real problems with that because keeping those interest rates low, it takes a tool away from my clients. It's hard for my clients to plan for their retirement when, you know, they get a 3% return on treasuries, yet you know, that's not going to allow them to reach their retirement planning goals. But we do feel like there's probably less risk, interest rate risk out there than most people perceive.
Okay.
At least in the short run.
Yeah, well, I was going to say, what's the time scale on that? Is that a 6-month view or 1-year view? What, briefly?
Briefly, I would say that certainly a one-year window, and maybe a little bit longer than that.
Okay.
And you know, everybody's trying to go with the shorter durations on the bonds, and that does give you less risk. But you also will get more bang for your buck with a little bit longer term durations.
Okay, Craig, stick around. We'll come back to you. More from Alison as well. We've had a German 10-year Bund auction.